All right, what's up, YouTube? I'm back, and I'm here to tell you the great news. I did blow the 4 funded account. It's a great way to start this video, but what I do want to do now is I realized I'm not going to share yet my trading and my trades, my exact trades, like during and post TikToks about them because it started to mess me up mentally. It started to, like, I'd start taking trades just for the fact of I want to win so I could show them wins, not how I traded usually, and that's what kind of screwed me over. Since I stopped posting, I've been already doing better, so it's kind of I've realized that that's the reason why. But I will be back, but I first need to get that side of me down. So I think what I gradually do is I'm gonna post on YouTube first, and then I'll gradually start to show you guys on TikTok and things like that. And I will do another journey. I'll do all this stuff again for you guys, probably in like a month or so. I just needed time for me to kind of reset, and I hope you guys respect that. But what I will start doing now is recaps every single day, trade recaps. And we're going to just look over the market, recaps or not, see what could have been right, wrong. And it's for both me to see the market after it's done in hindsight and to tell you guys what I see and how I view the market, and for you guys to kind of learn what I'm doing, see what I'm doing, and go to things step by step and kind of see what D Mike is doing in analysis through his day, after his day, where he saw things wrong, where he saw things right, and how that can change your view on the market and how you can learn from that. Let's get straight to it. I'm just gonna get right into it, guys. Y'all know me. I don't like to waste too much time. This is a new view, by the way, because I get to see my big monitor now. So if I'm not looking at y'all, I apologize, but it is for the better. All right, we'll start off by, okay, forget this. Forget this line. That's useless line. I'm using that just to reference a certain day. But let's get straight to it. What do I see right here? So we start off on the daily. We can even look at the weekly. Boom, we are at all-time highs. All-time highs. Straight, right after all-time highs. What is our bias once we see all-time highs? Unless we get a higher time frame confirmation, we stay bullish on all-time highs. Simple as that. It's easy to trade. You de-risk a little bit because you are at all-time highs, but that is what we are usually doing is we're going to stay at higher. We're going to stay looking for higher prices on all-time highs. What I like to do at all-time highs also is I like to see a higher time frame retracement so that I can target the highs made before that retracement. I do them, but I don't do them as much, and I'm not as confident. I don't put as much risk on it if I like do fibs, if I target standard deviation and things like that. But if it's anything other than that and I'm targeting previous highs that were made after a retracement, that's what I like to kind of see, and that's what I like to kind of function with. All right, let's get straight to it. Here it is. So we're looking at the daily now. Y'all know me. I like to always look at the daily at the start because higher time frame is king. Looking at daily, this is the day today. This is what happened. Just straight bullish. Let me take off all this stuff. Okay, boom. There's nothing on this candle anymore. All right. What am I seeing here? This fair value gap was not formed. This is finished forming right here because of today. I'm just seeing all-time highs. That's pretty much all I see. That's literally all I see here on the daily. There is nothing else for me to see. I come here to the 4 hour. What do I see? Simple. Very common. 4 hour fair value gap right here. We came here, had this retracement into this range, boom, went under here, moved up, did this, and then came back into that right there. I'm saying boom and this and that. Let me go back and rewind for y'all. On this hourly, what do I see? We see that there are these lows right here. We swept them. What do I also see? Is there an SMT between the 8 p.m. Sunday and the Monday 4 a.m.? If you don't want to look on Sundays, which sometimes it's better not to, look at Friday. Friday 3 p.m., Monday 4 a.m. Let's go look at that on the NASDAQ. 3 and 4 a.m. Boom. 3 p.m. Friday, 4 a.m. Monday. That is our SMT on the 1 hour. So that's another confirmation right there that we're still going to be bullish. Cool. So now today, my whole view of I'm going to switch bearish on all-time highs is out the window. Done. I'm only taking buys today. We move forward. We move on. What do I see here? We had this big push up. This right here happened because of that 9:30 open. Let me take y'all through it. I dropped down to the so whenever this originally was happening, actually, Price was not this high. What I wanted to see was maybe a retrace. What could have been a great trade was a retrace either to this inverse or this fair value gap right here, this fair value gap, and then we could start pushing up and I would target the high that was made. That did not happen. What did price do? There was no higher time frame retrace, no nothing. This right here is at 9:15, not 9:30. I'm not touching them. I want to see what the market gives me at that 9:30 opening. 9:30 opening would just boom up higher. People will say, Daniel, why don't you use this 15-minute fair value gap right here, boom, drop to a lower time frame, take your model on there, and you're done. Well, why don't you do that? Well, because what am I targeting? I don't want to target fib. I just said I don't feel it's not that I don't feel comfortable. It's just it's not as high probability if I'm targeting fib. So I'd rather be patient. I'm not here rushing. This is a pretty much a no news Monday. That's one. Let me put on Forex Factory for you guys. Forex Factory. Let's go. No news Monday. Tomorrow we have 2 red folders. So I'm already sitting a little bit laid back, as y'all know. Boom. We get this. I don't want to target this high right here. This it can very reasonably go up to this high. Like that is a very reasonable high to go up to. I just don't like that, and I know the risk that I put on. I won't get a good risk to reward. I won't. It's not worth taking the trade. As simple as that. We move forward on the day. That's it. I sat out the AM because what other confirmation? That's it. 11 is right there. 11:30 is like my maximum. And that's all I'm getting after. Just chop after it ran this range right here. Opened right here. And it just ran this range and consolidated. That I don't want to deal with that. I just didn't want to deal with that. It's not smart to deal with that. We move on to the PM. What do I see in the PM? I'm still bullish on the day. But let's look over here. We have this hourly fair value gap. I'm just going to mark it as sell side because I don't want to mark. You know what? Let me do it for you guys because y'all are here to learn and I'm here to help y'all learn. Boom. There we go. Thank you for functioning. PM session. What is PM session time? 1 to 4 New York time. Realistically, whenever the PM macro whenever the PM liquidity kind of starts, or like the opening of it, it's like 1:30. Treat 1:30 as like 9:30 kind of. That's the easy way to put it. Going on to the 15-minute, we don't get anything down. But right here at 1:30, this pushed into the out. Whoa, let me take all this off for y'all. Boom, 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 boom. That pushed into, it actually didn't go down into here yet. What price did at 1:30 was it was in this 1 hour fair value gap. Go down to the 15-minute, as y'all can see right there. Boom, 1:30 came into that hourly fair value gap. Next, okay, Daniel, let's look for a setup. SMT, the 1010 and the 120 go up to the Nasdaq again. 10, okay, it's a little off, but they are pretty. That's how you're gonna treat it. Just so y'all could see it. So those little times are off, but that's because they're correlated, but there are little differences. What that is, it's SMTs happening on the lower time frame between those two. So the 1010 is like the 1020 here, as y'all can see, because this was low, this was higher on the SMT. So this was an S on ES. So it created an SMT here, but we're going to treat this like this. That's how you guys should treat it. Also, I think the 1120 was another SMT low you could have literally used. Yeah, 1120 if y'all want to do that easier for your vision. But just so y'all understand and see this one, because that is the low of the hourly fair value gap also on both right there. So that's the SMT I liked to use. And it is on the 1:30. I apologize. Okay, what do we see this on the 5-minute? I'm looking now for a 5-minute break of structure. What I'm seeing today, I'm going kind of low risk. I'm kind of trading, waiting for a 5-minute break of structure. Then I'm just literally gonna drop down and find a discounted fair value gap and take that. That's literally all I'm doing. Boom, boom. Where's discounted fair value gap in this range? Above 50% is premium. So this is all premium, and then this is all discount. Correct? Correct. Let me put it. Oh, we're already on replay. Okay, nice. Well, let me just select the bar I want to select. right here. And I'll show you guys that this is today after. I apologize. I did not think I was on replay. But where are we in discount? There's this fair value gap. You see that discounted 5-minute fair value gap right here? Cool. So that could be a possible entry for us. And we take that, put literally stop under the candle of that, and target the lunch highs. So before we're seeing this, I want to see retrace. And now you guys see how I was talking about I want to see a high built and not just target anything kind of a range like an expansion up. I want it to target liquidity up there. There is a high for me to target. That's what I'm looking at right here. So this could be a possible trade for us to take. Boom. Take partial here at this high and take here, but it most likely would go up to that high. All right, Daniel, let's keep moving forward. It did not get, so I want you guys to realize, it did not get hit right here. If I select this ball, boom. Did it hit the 5-minute fair value gap? No. Would your order have been placed right here? No. Your limit order had not been placed. So don't chase it because it means something. It means something. It didn't get hit here, so it means something. Look at the 15-minute at 2:30. So at 2:15 candle close, which means at 2:30 exactly, we're going to reference back to this 15-minute, see what happened. 2:30. Go into here. 2:30 right here. So it didn't get hit. So we're already told we're not in this trade. We see this happen now. Reference higher time frame. Why are we not going to take this trade anymore? Order flow should be with us, should be on our side. Let me get this candle out the way. Order flow should be on our side. With this happening, boom, this is a very small fair value gap. Got inversed. So that's already not so great. And then same thing on the S&P. That 2:15 15-minute candle closed and inversed this fair value gap. Just so y'all can see. Boom. So now I do not want to take this trade anymore. Order flow is not on my side. Higher time frame order flow is not on my side. 15-minute fair value gap got inversed. It's not on my side anymore. I don't want to partake of this trade if it is not on my side, but I stick to my bullish bias. Just because a 15-minute fair value gap got inversed does not defeat all the context that I just put in here for you guys to say that we're bullish. Correct? Correct. So now we're not going to take this anymore. Forget that 5-minute fair value gap. I don't even want it anymore. Correct? Let's move forward. We play this out. Boom. We had this big candle down. Daniel, why are we not so good we didn't buy here? Now we got to buy here. Okay, I'm still patient. I'm going to wait for that 5-minute break of structure. Correct? Let's see it happen. SMT is still here between the hourly low of this, and now we also have in here the SMT. Let me just do that because it's easier to see. Boom, it is there also. Look on the hourly, we're not closed under here. Also, why do I think that we won't close under here? And I'm going to trust that 15-minute close could happen up if we have more confluence on the lower time frame and our model shows up to go bullish. Why we'd close above that hourly again? Because it is 2:30 when we get under this hourly fair value gap. There's still 30 minutes left, and if we do everything we need to do in before 3 and we're above that fair value gap, that means I'm fine. What do I already see over here on the S&P? Boom. Change in state of delivery. Y'all see it? I've marked it out for you guys. It's not here, but I'm not going to rush and going to change the state of that. I said break of structure. Next candle. Boom. Doesn't happen. Next candle. Boom. Took out this high. That's my break in structure right there. Now I'm going to mark here. As I said, it is simple. Find a discounted fair value gap. Take it to the opposing liquidity. 4. So I'm dropping down from 5, 4, 3, 2, 1. First discounted fair value gap under the equilibrium I'm taking as a buy. Okay, right here. We also didn't touch the discounted fair value gap. Daniel, why are we not in a trade? It keeps happening. I want to get into a trade. I'm fiending to get into a trade. Don't get in it. Why? It didn't touch it. If it doesn't touch your level, if it doesn't enter your fair value gap, if it doesn't enter your level, if it doesn't enter where you want price to go, do not force an entry. It means something. All this means something. So just be patient. What people could have done, and what I actually was about to do, is I wanted to go ahead and take a trade just because price dug down into this 5-minute fair value gap, and I was going to take a 1-minute break of structure. Like once price, if I just play, I'll show you guys exactly. Boom, price went above here. I wanted to take this entry right. I want to take this right here. But I quickly took off my limit simply because of the fact that we didn't take out that 5-minute high. So this is our range here to here of that 5-minute break of structure. This is our discounted fair value gap. And we didn't take that out. So, but if we went above that and made a new high after that 5-minute retracement into the 5-minute fair value gap, then I would have been looking to take an entry on that 1-minute, same model, just on the 1-minute. But it didn't happen. We didn't go above this high, so I'm still sticking to my 4-minute fair value gap. We go over here. My limit is still, boom, right there. And my stop, I have a tight stop, boom, right under here. Right under the candle. It does not need to be bigger. If you want it to be bigger, it can be on that third candle of the fair value gap structure. So it can be right here. And I said we're targeting that high. It's still a 1. Look at that ratio. It's still a 1 to 2. Still great. But I believe my model. This is what I'm going to do. This is what I'm doing this all in hindsight. I'm going to be completely honest. I did not take this trade. I didn't take a trade at all today. So I'm just looking at this in hindsight with you guys. So this would be a better stop. But let's keep going. Boom. So we enter in right there. Now you see it tapped it. Hold. We're going to hold. We're going to be patient. We're going to be patient. We're going to be patient. Let me just do this real quick for you guys. I want you guys to see a specific candle. Boom. Now everyone is scared here. Everyone is peeing their pants. We took out this high. Daniel, oh my God. It's going to take me out. Okay. I told you guys we could take a partial at this high. Right? Okay. Take your partial and put your stop at break even. Do it. Take a partial and move your stop to break even. As I told you. Do it. Let's watch it play out. Boom. Right back up. And to that last lunch high. This is the trade of the day. This is the trade I wanted to take. This is the trade I'm going to always look to take. This is perfection. This is perfection right here. You follow a certain model and you don't budge if the model does not happen, if the entry does not occur, if the liquidity is not provided, if the liquidity is not taken. You don't budge. You trade the model and exactly the model, and that's exactly what this is right here. We took out a short-term low. That's sell side. While on ES, we had SMT in an hourly fair value gap, took out that low again, had the 5-minute confirmation on the ES, and then we also proceeded to have the 5-minute confirmation right here. Boom. That's that break. That's literally a break of structure right there on NQ. And then we wait for a discount fair value gap, enter, put stop above that, under that fair value gap for bullish, above it for bearish. We're bullish right here, so we put it under the fair value gap. Boom. Take it. That's a bottom. People will look at this trade and say, Daniel, you bottom ticked. Daniel, how do you bottom tick? Is this bottom tick for y'all? Like, imagine if I had taken this execution, would I have bottom ticked? Would I have done something magical? No, it's so simple. I explained it in I don't even know how long this has been on. 5-10 minutes? It's not magical. Higher time frame. Find liquidity. Find where price wants to go. Find a draw on liquidity. Simple. Let price sweep the opposite side of liquidity and then, or sweep, like if we're bullish here, let's sweep. I'm going to speak if we're bullish. Let's price sweep sell side liquidity. And then if things get invalidated, don't rush to still get an entry. Don't hold tight to that limit order that's supposed to be out since you've seen that your model has been disrespected. Now you wait, let the model come again. Don't switch up your bias if there isn't obvious needing to switch, which never happened here. And then go on exactly that model, follow that exact model, take the exact entry where you need to take it, and target the exact highs you need to take. Take your partials if you're scared. I understand. Y'all could be scared. If I saw what this come down right here, I would have been scared too. I'm not a magician. I have emotions. I would have been scared. I would have been fearful. If I took my partials right there, my stop would have been a break even. And to be completely honest with you guys, if I saw that I needed to take partials there, and let's say I was undisciplined and I did not take partials there, I'd still put my stop at break even. That's for sure. I'm not letting price reverse on me after all that and after I could have already taken profits. If I'm in one contract, I would have either taken it out at that high or at the buy side liquidity. That high, I'm pointing at this high right here, or at the buy side liquidity I marked. Stop at break even. Risk is off the table. What do you have? What's going on? Your stop is at break even. You're not gonna lose. Your stop is at break even. It's not a loss. But yeah, that's all it is for today. That's all I have to say. And my biggest tip for you guys today is stick to your model. Stick to your model. You guys see this right here and you guys think it's magic. This is extremely simple. These are basic things you can learn from. There's so many mentors out there. Like, I'm not gonna be here and sell you guys a course. There's mentors out there that teach this stuff. Maybe, yeah, they're super pricey and stuff. This stuff is free on YouTube, guys. Equilibrium. I taught it to you in a second. Price from bottom to high of a range. Under the 50% is discount, above it is premium. We want to find a discounted fair value gap if we're bullish, premium fair value gap if we're bearish. How simple can that be? How simple? You want to, if you have something like this where it's a higher time frame, invalidation, before you even entered, forget it. Get out don't even leave close that limit order you had and wait for the model to come. Just like this. Just like this. Daniel, you're not trading 1 minute. Like, this is so much time, Daniel. I don't think I can hold for this long. This is, what is that, 40 minutes? 40 minutes. How much money could I have made on you if I create a limit order? Let's say we put in 2 right there. We'll run I'll do this just so you guys can see all this. Like, I'm not, like, I want you guys to see how reasonable this is. Run a limit order. Boom. Oh my God, I took the limit order out. There, create limit order. I already went over this, so I know I'll do 2. Boom. And then, since we're on replay, I'm just letting you guys see this in replay. Stop under the 4-minute fair value gap. Risking 370. What are we targeting? You could take one out right there. That means right there you would close, what is that? Like 5 something, and then the rest would be over there, which is absolutely great, which is insanely great. Insanely great. You're risking 370 and you're probably going, you're dead. What is that? You're definitely printing over like 1.2 for risking 370. So it's a great trade, great risk to reward, great model overall, and great execution if you can just stick to the model, if you can be patient, if you can just let it come to you and let it play out. There is extreme profitability in this market, and once you see things like this, you'll understand that there's so much profit to be made, and it is not as hard as people make it seem it is. That's all I have to say. I'll be back tomorrow. Wednesday we do have FOMC, but I'll probably be trading after FOMC passes. But that's all I have for you guys today. I hope you guys learned something from this. I'm sorry if I got a little, vocal with you guys today, but that's me expressing my emotions to show you guys that this is so doable if you put your mind to it. And if you really just stick to a model, it's very doable. But I hope the best for you guys and the best trading for you guys, and I'll see you guys later. Peace.